On Business Incorporated today. Regional MSME Investment Fund for Sub-Saharan Africa to get $10 million from Dutch-based Entrepreneur Development Bank, The International Air Transport Association reports that over $600 million of airline funds are trapped in 18 African countries. And the United States Agency for International Development to create research and innovation centers in Liberia. Hello and welcome to the program. I'm Ini John Mekwa. Well, we head to the markets now. In Nigeria, the market is open after 2 days of holidays. At intraday, it was trading in the negative territory. South Africa was in the positive territory, up over 1% at intraday. Egypt and Kenya markets are still closed. And so also in the Middle East, the holiday, it's a very long one in the Middle East. All the markets are still closed. In Europe, the pan-European stock 600 climbed 0.7% in early trade, with travel and leisure stocks jumping 2.3% to lead gains, while food and beverages slipped 0.6% lower. However, the European Central Bank made a big announcement, and Chelsea is in Frankfurt to give us details of that announcement. Hello, Chelsea. Good afternoon. Thank you for joining us once again. So the European Central Bank over there in Frankfurt has just announced its latest policy decision. What's the outcome? What are the details?
Well, the European Central Bank has decided, as expected, to keep its policy in place. It will keep interest rates at a record low. It will continue to buy bonds to also help keep interest rates for companies, for governments, for people very low as we continue to see the economy recover through the pandemic. But this meeting was particularly important because the ECB has just recently announced a new strategy in which it's going to be much more tolerant of inflation. So around the world right now, we're seeing inflation rise quite quickly, in part because of energy prices, but in part because of the reopening of economies as well. And there's been a lot of concern about this rise in inflation. But what we're hearing from central bankers here in Europe and also in the U.S. is that they're not too concerned about this rise in inflation. And in Europe, they actually still believe that inflation is too low. So the ECB is now saying that they're going to allow inflation to rise a little bit more than they initially allowed it to, and they're also going to keep their policy very, very easy until inflation looks much stronger. So basically what they're saying is that this very accommodative monetary policy is going to be in place for quite some time.
And Mercedes-Benz parent Daimler is updating investors today on how its electric vehicle strategy is progressing. What are the biggest questions from investors on this?
Well, investors really want to know how successful the transition to electric vehicles has been so far for Daimler, and whether they see it really speeding up in the future. That's really what we've heard from Daimler today. They do say that the shift to electric vehicles is happening much quicker than they expected. They say they now expect to basically transition fully to electric vehicles by the end of the decade. Previously, they had been looking to basically have about half of the vehicles they sell be fully electric by the end of the decade. So that is a bit of a forecast upgrade as well. They do expect to invest about 40 billion euros into this shift, this accelerated shift. So they are going to really ramp up research and development into this as well. And they also announced today that they are going to be building 8 different battery factories across Europe and the US that will help fuel these new electric vehicles as well. So from Daimler, the message seems to be that they are very much on track with the EV shift. But for now, the number of electric vehicles they are selling is still quite low. Only about 3% of the vehicles they sold in the first half of the year were actually electric. So they are putting a lot of money into this, but for now, the market hasn't quite caught up.
We hope it catches up for them. Well, Germany and the United States have reached a deal to allow the controversial Russian gas pipeline Nord Stream 2 to go forward. What more do we know about this deal, about this agreement?
So Nord Stream 2 has been a very politically contentious issue here in Europe for years now. Germany wants this pipeline because they say it will basically secure the energy supply as well. Germany is in the process of phasing out coal and nuclear power, and they say that they need more energy sources in the meantime as they shift more towards renewables. But Ukraine in particular, which is where a lot of Russian gas is coming to Europe through now, has been very opposed to this. They say that this Nord Stream 2 pipeline really threatens their security as well. It would be a big blow to them because they're receiving about €1 billion a year in transit fees from Russia. So they very much don't want to see this pipeline happen. What the U.S. and Germany have now agreed is that Germany will essentially provide some money to Ukraine to allow for them to increase their share of renewable energy sources, to expand their energy field as well. The German government is going to try to negotiate for these transit fees that Ukraine is now very dependent on to continue. But Ukraine is very unhappy with this deal. They say it doesn't really address the broader security concerns that they still have. So it's a movement to allow this pipeline that's been in development for years, that has cost about €11 billion, to finally come to completion. But there are a lot of critics of it still here in Europe.
All right, Chelsea, thank you so much for the update. Enjoy the rest of your day. So we'll move over to London now, where Juliana is standing by to also give us updates from the UK. Hello, Juliana. Good afternoon. Well, there's been a new development in the proposed takeover of Morrisons. What's the latest in this deal?
Yes, good afternoon, Innie. What it is that we have a date. We have a proposed date for a Fortress £5.6 billion takeover, and that's August the 26th. There will be a gathering of shareholders on the 16th of August, and the proposed deal needs the backing of 75% of shareholders for the deal to go through. This has been a massive talking point here in the UK, mostly because Morrisons employs over 110,000 people. It's one of the biggest private sector employers here in the UK. And what's going to happen to that staff? That's a massive cause for concern. Also, much more widely, a lot of industry insiders have been asking, what is the future of big grocers in the UK and their retail space, which seems to be the massive pool for US private equity backers. We know that a couple of months ago, Asda was purchased by the Issa brothers. Yes, they are British based, but it was financially backed by TDR Capital. So yes, Morrisons has been in somewhat of a bidding war. First of all, we had the Clayton, Dubilier and Rice bid. That was seen too small, and then we had two separate bids, one from Fortress, one from Apollo. Earlier this week, Apollo said that they'd be pulling out of an individual bid, and they were happy to come on board with Fortress. In the detailed explanation that was published today, Apollo hasn't appeared alongside Fortress. So at the moment, it does appear as if the private equity firm Fortress will be successful in their bid to purchase Morrisons for £5.6 billion. We'll just have to wait until this time next month to see an update on that.
Yeah, we don't have to wait for too long. Well, the government is taking another step towards cutting its majority shareholds in National Westminster Bank. What's next after this?
Well, we have to wait and see, Innie. What's happened is in 2008, during that financial crisis, NatWest, which was formerly known as the Royal Bank of Scotland, they were in a serious amount of trouble, and the government took over the bank. It became a public-owned bank, and over the past couple of months, this is actually going to be the third time that the British government is selling off a huge stake. It currently owns about 55% of the bank. This latest round of offloading could raise the British government about £12.5 billion, money that they desperately need. They've announced that Morgan Stanley are going to be overseeing this transition because Rishi Sunak has made it pretty clear that it does want NatWest to become a private bank once again. It's been obviously a torrid year for the British economy over the past 18 months, but the recent health update from the banks does show that their balance sheets are working. Impairment payments payments, which were feared would be too high because of all of the debt and the loans that were doled out. It doesn't seem to have affected them. Yes, interest rates are at the historic low of 0.1%, so profitability at the moment is at an all-time low. However, their balance sheets look pretty good, which is why the British government are using this time to sell it off. However, investors weren't happy. NatWest was one of the biggest fallers on the FTSE All-Share after this announcement.
And consumer spending on credits and debit cards in Britain fell last week, dropping further below its pre-pandemic levels. What drove this?
It seems to be the change in consumer habits, Inni. Yes, the economy is ticking. We had May GDP figures last week showing that the economy grew 0.8%. But even though that was the fourth consecutive month of growth, it was a slower growth. It's the slowest growth that we've seen since we are starting to see growth. And that's because people are doing things differently. They're trying to find a rhythm. Whereas, of course, during the pandemic, people are spending so much in supermarkets and in grocers. Yesterday, we have that news that online grocery sales fell for the first time on record. People are going to bars and restaurants. They're spending a little bit more. So all of the other data that we're seeing that's been released from the Office for National Statistics and from the Bank of England are backing this data, which basically says people are spending, but people are spending cautiously, and we'll just have to wait and see whether or not people are still scared of COVID and whether or not they're going to come out en masse, which of course the Chancellor and the Prime Minister are desperate to see. But let's have a look at those numbers at intraday. The FTSE All-Share is up 0.37%. The FTSE 100 is also up by 0.14%, and the FTSE 250, the domestic market, that's up by 1.15%. In the currencies market, the British pound is also up today on the US dollar by 0.36%. Up on the euro by 0.38% and up on the Japanese yen at intraday by 0.40%, Inni.
Oh, thank you so much, Juliana, and enjoy the rest of your day.
You too, thank you.
So from the UK, we go over to Asia, where shares in Asia Pacific were higher today, with markets in Japan closed for a holiday. Hong Kong's Hang Seng Index was among the biggest gainers regionally, rising about 1.7% as of its final hour of trading. Shares of Japan Group surged around 8%. Mainland Chinese stocks closed higher, with the Shanghai Composite climbing 0.34% to 3,574.73, while the Shenzhen Component rose 0.32% to 15,262.19. South Korea's Kospi gained 1.07% to close at 3,250.21. Elsewhere, the S&P AX 200 in Australia advanced 1.06% to finish the trading day at 7,386.40. Shares of major miner BHP soared 3.13% after the firm announced the signing of a nickel supply agreement with Tesla. MSCI Brothers Index of Asia Pacific shares outside Japan rose 1.2%. In the United States, stocks index futures were up in early trading after the major averages advanced during regular trading to turn positive for the week. Futures contracts tied to the Dow Jones Industrial Average gained over 34 points. S&P 500 futures and NASDAQ 100 futures were both higher. During the session, the Dow gained 286 points, while the S&P climbed 0.82%. The NASDAQ Composite was the relative outperformer, rising 0.92%. Energy was the top-performing S&P group, advancing 3.5% as oil prices rebounded. I'm talking about oil prices slipped today after an unexpected rise in the U.S. crude oil inventories and as rising COVID-19 infections threatened demand. But prices held on to most of their gains from the previous session on expectations that supplies will remain tight through year-end. West Texas Intermediate eased 0.2% after climbing almost 6% over the previous two sessions. Investors are weighing signs of continued robust demand for oil products, including gasoline, against the waves of disruption triggered by the spread of Delta variant of coronavirus. We'll take a break now. When we come back, we head straight to the African continent. To stay with us, it's Business Incorporated on Channels Television. Welcome back. It's still Business Incorporated on Channels Television. And on the commodities market update, we talk about coconut today. The price of a bag of coconut has risen by approximately 213%, going from 8,000 naira in March 2020 to 25,000 naira in July 2021. Now, this is about 10 times higher than food inflation, which is risen by 6.85% from 14.98% in March 2020 and is now at 21.83% in June 2021. What is driving this and how is it affecting productivity in Nigeria? Sheyi Omidiora, research analyst with financial derivatives company, tells us about this. Hello, Sheyi. Good afternoon. Thank you so much for joining us this afternoon.
Good afternoon. Thank you for having me.
Yeah, so why has the price of coconut increased even more than the price of food inflation, 10 times more? And how has this affected the commercial attractiveness of coconut production in Nigeria?
Yes, so as we are well aware, it basically just follows the laws of demand and supply. We know for a fact that coconut is used for a variety of things, from medical purposes to consume even our normal daily consumption, to the pharmaceutical space as well. So there are a number of reasons for this, and of course the demand has also increased substantially in the time period being looked at. We also need to look at the fact that the COVID pandemic also happened, and with the health benefits and uses of coconut, especially in the healthcare sector, people tended to look a lot more towards looking after their health, and this subsequently has driven higher the demand for coconut based or coconut derivatives. And these are subsequently also increased the prices of coconut. Also, we should know that a lot of arable land in Nigeria, we are only cultivating about 10% of it. And this, of course, is also suboptimal. So those are a number of reasons why prices of coconut and, of course, coconut derivatives have gone up substantially in the past year or so. As regards the reasons why it should, things that will also drive the competitiveness in Nigeria, we need to consider the fact that a lot of the coconut being produced in Nigeria is currently being done in Lagos State, about 70%. And knowing that coconut is a very resilient plant, it can grow under a number of conditions, although it still needs a significant amount of water. So it grows a lot more in coastal areas. This actually understates the reason why it's grown a lot more in Lagos State. But we need to scale up coconut production by looking at other states and also improving farming practices in these areas. So that's one way we need to look at in terms of scaling coconut production in Nigeria.
All right, so talking about the processing now, the processing capacity in Nigeria is approximately 300,000 metric tons, which is only 30% of national processing needs, standing at about 1 million metric tons. So this translates to about 700,000 metric tons gap. How is this gap being filled?
Okay, yes. So we know for a fact that we are not producing nearly enough coconuts to meet our demand needs, and a lot of this demand gap, this shortfall, is being made up. It's being made up basically by imports from places like Ghana, who is also one of the top producers in the world. They are about 15th in the world. We also import a lot from other countries like Ivory Coast and Togo. So these are some of the places where we make up our shortfall from. But beyond that, as I said earlier, we need to start looking inwards and also ramping up coconut production by looking beyond Lagos and looking at other states, so that we can also make up some of these shortfall, and also consequently export to other countries, seeing as there's an increase in coconut demand worldwide. The market has grown substantially by maybe close to 500% in recent times, and to about $400 billion. So this is a market we really need to start looking at.
So we see a lot of Asian countries, Indonesia, Philippines, currently doing very well in the production of coconuts. They're given 70% of global exports. And Nigeria does have that potential. Now, how do we, I know you mentioned about looking outside Lagos, how do we maximize this comparative advantage that Nigeria has so that we can compete with these other Asian countries in coconut production?
Okay, yes. So for a fact, we know that these Asian countries have a lot more in terms of quality of seedlings and in terms of farming practices. So these are two major areas we also need to start looking at. A lot of research and development goes into the quality of seedlings that are being planted. We also know for a fact that there's a lag in between when the coconuts are planted and when the first fruits and eventual harvest actually start coming in about between 6 to 10 years. So that's a significant time frame, and we tend to look a lot more towards perishables because they are the ones that actually drive a lot of our inflation numbers. But in terms of looking at comparative advantage, yes, we need to start improving things like our research and development so as to improve the quality of our coconut seedlings and consequently increase the yields and quality of the coconut being produced. Also, farming practices. We know that insufficient rainfall or change in weather conditions is something that is occurring on a global level. So we need things like better irrigation farming and ultimately, in general, better farming systems. So these are two ways where we can consequently increase our own production capacity in Nigeria.
All right. Thank you so much, Shay, for sharing your thoughts with us on expanding Nigeria's coconut production at this time. Shay Omejora is a research analyst, financial derivatives company, and he joined us this afternoon. Thank you so much. Enjoy the rest of your day.
Thank you.
So moving on, the regional MSME investment fund for sub-Saharan Africa has attracted a further $10 million from the Dutch-based Entrepreneurial Development Bank, FMO. This additional funding will support the growth of Africa's MSME sector and foster economic development through employment creation, income generation, and poverty alleviation. The investment will finance loans to businesses and low and middle-income households by more than 50 selected financial institutions. The investment in Class B shares for a maturity of 7 years will increase the fund's total asset of above $160 million. REGMIFA currently operates in 20 poor and difficult-to-access countries in sub-Saharan Africa, of which 13 belong to the least developed countries. It thereby provides financial intermediaries with a stable source of long-term local currency financing coupled with technical assistance. The International Air Transport Association, IATA, the clearinghouse for global airlines, reports that over $601 million of airlines' funds are trapped in African countries, a situation that has negatively impacted carriers operating in the continent. While Nigeria is missing from the list of countries that have kept foreign airlines cash, the country is blocking funds Algeria, Burundi, Central African Republic, and 16 others. The stock fund is proceeds of ticket sales made in local currency but blocked due to non-availability of foreign exchange to recoup it. The Single African Air Transport Market, which is a vehicle for achieving air liberalization, is a flagship project of the African Union Agenda 2063, designed to create a single unified market for air transport in Africa. Once completely enforced, the single market is supposed to allow significant freedom of air transport on the continent. Kenya Electricity Generating Company has distributed more than 1.9 million tree seedlings to communities and institutions as part of its efforts to reduce carbon emissions. The tree seedlings, which is equivalent to 3.167 acres of forest cover, have been distributed over the last 7 years. And the United States Agency for International Development has announced new funding to create research and innovation centers in Liberia. Subject to availability of funds, USAID plans to provide $30 million over the next 5 years for this initiative in Liberia. The center will use research and build training capacity to address health system challenges. Well, that's it on the program today. Thank you so much for watching. I'm Ini John Mekpa.